This is not financial nor professional advice. This video is for entertainment only. Hey everybody, today we got the CPI, better known as the CPI measurement of inflation, and it turned out to be 8.5%, which is pretty outrageous given that we've had much lower inflation for the past decade at least. And they say the core inflation, which excludes gasoline and food, it excludes the two things you need to live. How they can do that, I don't know. That is core inflation to me. But they strip those out and they say if you get rid of food and gasoline, then it's 6.5%. But it's still outrageous inflation. And the market took it on the chin pretty much. I think you have to have nerves of steel to trade in this market. I've tried shorting a little bit, but it changes so fast that I end up just breaking even on it. I'm doing the SQQQ, which is the shorting. It's an inverse fund that shorts the largest 100 companies on the NASDAQ. And that's been variable. I think Apple and Microsoft have been saving the day because they make up so much of the index. But the big thing I've been successful with is steel. And I'll show you that the different steel companies that I've owned over the last month or two, and I've made money on all of them. I just have picked out the two biggest winners, and I'm sticking with those. And then I also have a surprise for you, and I'm shorting something I never thought I'd be shorting, but it seems to fit the situation of rising interest rates, and it seems like a no-brainer. So you want to stick around for that. Nucor is a tree hugger's delight, as they manufacture steel that's 97% recycled steel. Wow. So Nucor is easily probably the most environmentally sustainable steel producer that I've run into, and that's probably why it's so popular. It's a very new age. I've invested in some older, original gangster type of steel mills, which I'll mention briefly. But I think Nucor is where it's at. And I feel so good about investing in this that I might pour more into it. As we look at the one-year chart on Nucor, symbol NUE, we can see that the chart is reflecting its recent explosion upwards on the one-year basis. And it's, I think, partly because it's so environmentally conscious, and also because steel is so needed and is being used especially by the defense industries. So it's going to be it's sort of government based in a way, with so many governments needing to strengthen their defenses. So that's going to continue. I don't see that as stopping. It's an undervalued company. It's trading around in the 150s now. Its value is above 190. Its trailing price to earnings is around 7. Its forward price to earnings is around 10. I think there's lots of growth ahead for this. Its earnings growth rate is an outstanding 37%. And I think I like the story and I like the stock, and you put that together with the good numbers, and I think we have a winner for some time here. So I plan to ride it all the way to 200 at least, because I think they will keep producing a good steady profit. The other steel company that has captured my attention is Steel Dynamics, symbol STLD. It's about a $16 billion market capitalization. They're also into recycled steel as well as all the traditional things they do. And if we look at the 1-year chart, we can see that it has exploded upwards recently. And I think this probably has a little more pop to it even than Nucor. I love Nucor just because of the sustainable company it tries to be. And Steel Dynamics does some of that. And Steel Dynamics statistics right at the moment might be a little more compelling, as their trailing price to earnings is about 5, their forward price to earnings is about 7, and their earnings growth rate is 38%, which is really outstanding. So I think we have another winner here. I think these are the two best steel companies that I've been investing in, and I've made money so far, and I think I'm going to continue to make money. These are highly cyclical stocks, and so you want to get in when the getting is good and then probably get out. You probably want to get out of these stocks sometime before 2023, but who knows what's coming. Maybe we're going to have a long pop on the usage of steel, especially because of the defense situation that so many countries need. Because of the need for steel by the governments, and the demand has been so strong until it's tamped down by inflation. I don't know when that's going to occur, but it shows no sign of occurring yet. But I think you can do okay with the original gangsters of steel, which are U.S. Steel. As an example, U.S. Steel's symbol is X. It's just simply X. And another original gangster would be Cleveland Cliffs. Cleveland Cliffs symbol is CLF. But I think you could do fine with those steel companies too. And especially if you want to spread it around a little bit more, that would be a way of doing it. But I think these two companies that I presented probably have a little more pop to them. My special treat for the day is an investment that I think is sure to go up, at least in my mind, and in many other people's mind as well. I sat around and asked myself, well, stocks, what's going to happen with stocks? Well, some might go up. A lot more are probably going to go down, okay? But then I asked myself, what's likely to happen with bonds? And the unanimous response as to what's going to happen with bonds is that they're likely to go down, because as interest rates go up, bonds tend to go down, and long-term bonds should probably go down more than short-term bonds. So I found an inverse fund that's triple leveraged, and this fund is, I'll just give the symbol, it's TMV. TMV is the triple leverage inverse bear fund on the 20-year bond, okay? And so for every dollar that this index goes down on the 20-year bond, you make $3. You move the opposite way of the way the bonds go, and the bonds seem sure to go down, and that you're getting triple leverage, you're getting triple rewarded for doing the obvious thing. So I put significant money into it, and I think I'm tempted to double down on this probably tomorrow. Depending on conditions, you always gotta play the market, because even a situation like this tends to get overbought or oversold, and you want to be careful how you play it. But I think the price is in the high 80s. I think it's almost sure to go over 100. And so this is every day the Fed meets and they decide to raise interest rates is a celebration, because they just lowered the price of bonds, and you move in the opposite way, so you triple benefit from the Fed. And so I think this is one that you could rest easy with again. And I will continue to find these things that seem to be sure things, and other things that seem to be a good bet. And I think I've given you 3 good bets today. Be sure to like and subscribe so that you receive future notifications of videos Thank you, and I will plan to see you in the future.